What is up YouTube? Welcome back to another video in our series all about Prodigy Finance, where I'm uncovering all the details you need to decide whether you should take a loan from Prodigy Finance to study abroad. In the previous videos, I covered what is Prodigy Finance and how they work and the loan application process. If you have not already seen those videos, you can go through them later. First, let's discuss about today's video, which is going to be really interesting as we talk about the real stuff, which is what you should look for when you get an offer letter from them. On the screen here, I have a provisional offer letter which I recently generated. Here I have entered that I want to study MSc in Management from Lancaster University starting in October 24. So the very first thing you come across is the loan amount. The maximum for this course and school you can get is $34,500 US, and on top of that, Prodigy also charges an admin fee of 5% which will be added to your loan amount. So if you take a loan of $34,500, then the admin fee will come out to be $1,725 US. And there is one more charge that they have started now, which was not there when I got my loan, is a processing fee of $100 US, which is not added in the loan amount but needs to be paid separately prior to your disbursement. So basically you will be taking a loan of $36,225 US. Now let's say if you take the loan for 10 years, you will be paying a monthly EMI of $568. And you will be paying a total of $68,160. Now if you change the loan term from 10 to 15 years, your monthly EMI gets lower, that is $472 US per month, and at the end of this term you would have to pay a total of $84,960 US. And similarly, if you opt for 20 years, your monthly EMI would be $434 per month, and at the end of 20 years you would be paying around 104k. You can use the simple simulation tool to get the idea for your total cost of loan and the impact of different loan terms. But the good thing here is that you do not have any penalties if you repay your loan early, which means you can just pay off your loan in 5 years, and in this way you can save a lot of your money, which is what I am currently doing. Is I am paying double EMIs every month and would be able to repay my loan in just 3 years. Now coming to the most crucial part, the interest rate, which is also a bit confusing to get your head around. It took me a while to understand it, but don't worry, I am here to make it simple for you. The interest rate is made up of two components. One is the fixed portion and the other is the variable portion. The fixed interest rate for this offer is 5.60%, but that will vary based on your profile, like your credit score, your employment history, your city, etc. Now on top of the fixed portion, you have the variable portion, which is based on a publicly available rate that is widely used in financial markets as a benchmark. Here they have SOFR, and the current rate for this loan is 5.33%. This makes the total interest rate for this loan offer to be 10.93%. Now you must be wondering, what is SOFR? SOFR is Secured Overnight Financing Rate, which is a benchmark interest rate for dollar denominated loans and financial transactions. It is the interest rate at which banks and other institutions lend money to each other overnight using US Treasury securities as collateral. It's considered a reliable and robust benchmark because it's based on actual transactions and is less prone to manipulation compared to previous benchmarks as LIBOR. On this website, you can see the variation of SOFR for the previous months, and also you can get a fair idea of what it's going to be in the future. Now, as you come to the very bottom of the offer, you can see a complete summary of your offer details. We have already covered everything, but there is a new term here, which is APR. And now you might get confused, like what is your real interest rate? Is it 10.93 or 12.16? APR stands for annual percentage rate, and it gives you a better understanding of the true cost of a loan over a year, including not just the interest rate, but also other fees and costs associated with the loan. Whereas the interest rate is simply the cost of borrowing the money expressed as a percentage of the loan amount. For example, here the interest rate on this loan offer is 10.93%, but APR goes one step further as it includes the interest rate plus any additional fees and costs you have to pay to get the loan, like the admin fee of 5% and the processing fee of $100 US. Now when you add these charges to the interest, you get a higher effective cost of borrowing, which is reflected in the APR. In this case, it comes out to be 12.16%. So when you are comparing loans, it's always better to look at the APR to understand the true cost. But if you are concerned whether you will be charged 10.93 or 12.16, then the simple answer is 10.93 is your interest rate. I hope this video helps you understand what to look for when you receive a loan offer from Prodigy Finance. And if you have any questions or need further clarification, drop them down in the comment section below and I will be sure to get back to you. And don't forget to check out the previous videos in this series for more insights on Prodigy Finance. And if you found this video useful, please give it a thumbs up, share it with others who might benefit, and subscribe to the channel for more content like this. Thanks for watching, and I'll see you in the next video.